results out from building materials retailer Cashbuild this morning show a 9% rise in revenue for the 6 months to December. Headline earnings, they were down 27% as profit margins came under pressure. Joining me with more on those numbers is CEO Pat Goldrick. Pat, thanks for coming in this afternoon.
Pleasure, Stephen.
Well, Pat, it's been a tough period for most. You've shown solid top-line growth, but as you say in the commentary, margins under pressure, a competitive environment out there. Is there any sign of that abating?
I believe there is. You hear about the general market with the car industry and things picking up. Well, we can see now in the last few weeks something beginning to happen, but it's very, very slow. It's also hampered by the recent unrest in the townships, because that is where a lot of our business occurs. We've got 188 stores and quite a large number of those are in the townships, and we're seeing now with the lack of delivery that is an issue. That is not helping people to shop in that area. But long term, we believe that will be sorted out after the World Cup.
Is that quite a recent development, or was that actually evident during the reporting period?
No, it's more recent. During the reporting period, we believe that most of this has come from a very tough market. If you take Cashbuild's growth over the last 6 months, it's been 9%, but if you take it over the last 5 years, it's something in the region of 21%. In the 9 weeks since the ending of the financial year, we've seen our growth cut down to 6%. And we're seeing it's getting tougher. The market is tough out there, and the reason for that is there's been the average transaction. Our transactions, that's the number of customers shopping in our stores for the same 6 months. They were about 7.2 million customers. That's 13% up on the same period of last year, and we expect to have about 15 million customers shopping with us. But the average purchase has dropped. Now that's two things. That's because the building industry has slowed down, which we believe is temporary, but there's also been deflation. Steel has come down in price, cement hasn't grown in price, it's static, timber has come down in price, and a lot of other products has come down in price. So we passed that.
So your prices have come down?
Our prices have come down, and there is deflation.
It's not often you hear that, is it?
No, it's good news for the consumer.
I mean, you mentioned unrest in the townships, over service delivery and other issues. Lots of your customers are based there. Who are your customers? Are we looking at small-scale farmers? Are we looking at DIY people? Who are they?
The majority of our stores are placed in the townships. That's where the housing market, we set out 10 years ago in our strategy to bring building materials to the communities where they want building materials. It's not like shopping for bread or clothes where you can travel by taxi. You need to bring your store into the community. We invested heavily in putting our stores in the community. We don't regret it. That is where our customer base is, and that's where we'll continue to do so. Yesterday, for the first time in a long time, 2 of our stores couldn't trade due to unrest, one in PE here and one in Soweto, and that's very unusual. But talking to our staff who come from these communities as well, it's not a happy environment, and we are waiting for, we don't believe South Africa is going to win the World Cup, but we do believe that after the World Cup and the how train is finished and the roads are finished, the cash that's being used on these areas will be paid off, and that then will be redirected going forward, we hope, into the housing market, meeting the needs that was promised during the elections, etc. That's been recognised, and that is a concern for us, that there is unrest in there for housing.
Well, of course, I mean, you have continued to open up new shops, though. 18 stores opened since July 2008, but during the period under review, 5 new stores opened and 4 refurbished. I mean, will you be continuing to roll out stores despite the environment at the moment?
Oh, yes. We will open, we've planned, we believe, a minimum of 3 stores open up now in the next 3 to 4 months. We'll refurbish approximately about another 8. We've got anything up to 40 stores in the pipeline at different stages. We always plan to open in around plus or minus 10 stores per annum. As you said, 18 stores over the last 18 months, and we will continue with that. We're not going to stop investing.
Where are you aiming those stores at?
It's still in the rural areas. That is where most of the people live. That's where the housing is needed, and in the townships in and around the urban areas as well. But it's mostly the stores are needed in where the masses of people live, and that's where we're placing our stores.
Well, just looking at some more of the numbers, cash flow is strong. It's improved. Cash and cash equivalents up 9%. Your stock levels also down 9% to 68 days of stock holding. Is this due to seasonal factors? Is this a concerted effort to bring those stock levels down?
No, there was about 12 months ago, We had a lot of stock. We bought in steel when there was a shortage of steel. We paid the high price for it. Steel dropped in price since, and that affected our margin. Also, with the lack of demand, we're finding that our suppliers are able to deliver quicker and deliver on time. We also find that because Cashbuild is a listed company, has got lots of cash, suppliers are prepared to invest with their stock in Cashbuild rather than take a risk and not getting paid elsewhere. And we're managing our business smarter, but there hasn't been anything conscious about cutting back stock. It's just a circumstances and the reduction. We have no longer had a buy-in of steel to meet our demand like we did 12 months ago.
You talked about the World Cup perhaps lifting spirits among your customers. We also had consumer confidence numbers out today that showed a sharp rebound in consumer confidence between the fourth quarter of last year and the first quarter of this year. And I presume this is going to be affecting your customers as well. Is there any sign of them becoming a bit more confident in their economic prospects and having a bit more cash in their pockets? I
think at the moment they're uneasy. Because they're not sure what's going to happen over the World Cup. There was a lot of people involved in the infrastructure, building the stadium, the how train, etc., which is our consumers. They were also affected when the mines started laying off about 12 months ago. When they got their redundancy, they went back and they invested in their homes. That money has dried up. They've gone back to work and they've got to start earning again. So there is a lack of confidence we're seeing out there. But we believe that is short term, and we hope that after the World Cup the spirits will be raised, and then they will see that the government will concentrate on the issues that the people want, which is more close to home.
And when would you expect your profit margins to start improving, or do you think they are at more normal levels where they are at the moment?
Well, in retailing, you always get some profit margins due to inflation. Inflation is ideal for the consumer at the moment. I think the margins are under pressure. We wouldn't want to see them go any lower. We expect them to stay, not to go any lower. They may improve slightly, but not in the significant future, and in the immediate future.
Fill your prospects, Pat?
We are quite bullish, but not until after August.